everybody. Welcome to On the Money. I'm Maria Bartiromo, reporting from right outside the New York Stock Exchange. Happy Labor Day, everybody. We'll talk jobs, the economy, and the state of the American worker with the top labor official in the Obama administration. Will we have a bumpy September for the markets? Taper Talk, the new head of the Fed, and the debt ceiling all return. What does it mean for your money? And then buckle up. We will find out what's fueling Ferrari. How is this ultimate luxury brand doing? We'll go for a spin. You don't want to miss it. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
All that coming up ahead. But first, let's get a look at the news of the week. Here's Bill Griffith. Bill, over to you.
Thanks, Maria. Here's a look at what's making news as we head into a new week on the money. America's economy expanded at a much faster pace than first thought. A huge revision in the second quarter gross domestic product showed the economy grew at an annual rate of 2.5%, revised upwards from an initial reading of 1.7%. Better readings in both exports and business investment were responsible for much of that revision. Well, the markets got off to a nervous start this week, having their worst day in more than 2 months on Tuesday and hitting a 2-month low on concerns about American involvement in Syria. Stocks recovered, though, later in the week. America's housing market continues to improve, though at a slower pace. The Case-Shiller index of 20 cities showed home prices rising by about 2.2% in June from the previous month and up 12% from the same period a year ago. And Americans just are not driving that much anymore. Miles traveled peaked back in August of 2007. They dropped sharply during the Great Recession, and they have since plateaued even though the economy has recovered. The Federal Highway Administration says that number continued to fall in the first half of this year. And analysts say the drop is partly due to the economy and partly lifestyle as more people choose to live in cities. Watching Syria, waiting for the Fed, and just how is September shaping up? Let's talk about it. Joining me now are Rick Reeder. He's Chief Investment Officer of Fundamental Fixed Income at BlackRock. They have about $632 billion under management. And David Gordon is Head of Research for the Eurasia Group. Gentlemen, thank you both for joining me today. David, this long lead up to whatever is going to happen in Syria has certainly spooked the markets to some degree. What do you expect to happen here, and what impact will it have on the market longer term, do you think?
Yeah, I think you're likely to see U.S. attacks along with some French components in the next few days, but I think these are going to be very restricted attacks. The Obama administration has gone out of its way to really signal what they're going to do and what they're not going to do. I actually think the chances of a retaliatory escalation are pretty slim. So I suspect that we're going to see some downward pressure on energy prices in the aftermath of these strikes.
And Rick, initially a lot of the safe havens moved higher, including oil, gold, bonds as well, but they've pulled back in the meantime. What's the market's message here, do you think, about all of this?
Yeah, the market, I think, as David just described, the markets are assessing this as strategic, probably something that'll be done pretty quickly. Markets, though, do have one eye on, certainly when you talk to some of the major market participants as ourselves, people are thinking about, do you start to see contagion? Do you see others coming into this? You know, where does Russia, China, how do they interface with this? But by and large, the markets are assuming this is going to be reasonably strategic and fairly quick. And
through it all, we've got the possibility of tapering. I mean, tapering, the threat of tapering pushes rates up. The threat of the attack on Syria pushes rates down. Where do you think they're going here?
So this is why you find a range. This is why the markets have come pretty close to what we would describe as fair value, getting closer with the 10-year, getting closer to 3%. We think ultimately rates are trending higher. I mean, the Fed has distorted interest rates down. We think when 10 years were in the high ones, you had pushed interest rates 125 basis points. You're getting pretty darn close to fair value. So we think we drift higher into next year, but you've done a lot of the moves so far.
And again, David, you don't expect peripheral damage. I mean, one of the fears is unintended consequences in other parts of the Middle East, possibly a confrontation of some sort with Russia at some point. I mean, you don't see that happening.
Yeah, I think the main risk here, if you're looking at who might retaliate, it's not going to be the Russians. It's Iran. But Iran really wants to hold its powder now, it seems to me, because they're looking to utilize a new round of negotiations with the West over their nuclear program to ease sanctions on them. I think they're really loath, the rhetoric aside, to get into any escalatory confrontation over Syria.
Let's look at the economy, Rick. We had some pretty encouraging data early in the week, not so encouraging later in the week. I mean, the GDP revision higher was very encouraging. Jobless claims were good, but the personal income and spending were a little soft there. What is the state of the economy in your view right now?
You know, our view is the economy is in better shape. I mean, we think you're not going to see tremendous growth. You still have the headwinds you've had before, but fiscal drag is abating that you've had, certainly had over the last couple of years. Housing market is, we're a little concerned about the near-term rate effect, and we're watching that, but we think the housing market, which is your primary driver of consumption, inflationary expectations, as well as hiring to a large extent, we think housing's in good shape. The lending mechanism can work. Energy has been a big boon to the economy. So we think the economy's in good shape. We think the data will continue to be firm, but certainly seeing pullbacks at time. But we actually think the U.S. economy, we're encouraged by where it's going.
Richmond Fed President Jeffrey Lacker said this week, and of course he's been no fan of the quantitative easing program anyway, but he says that the criteria the Fed set up to begin tapering has already been met. Do you agree? Do you think they'll start tapering in September?
I think it's a given. I think the Fed wants to get out of the quantitative easing business. I think it was put in place largely to go into fiscal cliff, or the anticipation of fiscal cliff at the beginning of the year. I think at this point in time, it was foam on the runway back then. Today, the transmission mechanism into employment is dull, and forward guidance is a more effective way to actually manage interest rates.
And Rick, one more cloud on the horizon in Washington. We have a debt ceiling that we're going to hit. We were reminded this week by Treasury Secretary Jack Lew that'll happen in early October. You think that battle could get ugly?
I do. I think there's a good chance that we're going to get to the edge and potentially go over. And I don't think the market reaction, I'm certain the market reaction won't be like it was
in August of 11.
Exactly right.
Remember that well, all the volatility.
Absolutely right. So I think markets have come to the conclusion that if it happens, that it'll be a lot of noise, and you'll create some near-term volatility, but you won't create that incredible duress that you saw back in that period of time. But I do think it is going to get contentious, and I do think that it's not going to just get extended again. I think it'll be an issue.
Gentlemen, thank you. Rick Reeder, David Gordon, thanks for being with us today.
Thanks. Thank you.
Great. Thanks for being here.
Now back to Maria with the rest of the program.
Thanks so much, Bill. Up next, we are on the money. We can work it out. I'll be joined by the new Secretary of Labor, Tom Perez, on his new job and the jobs of all Americans as we mark Labor Day. And then later, Ferrari has revved up its sales here in North America, making it the most profitable unit at Fiat. What has customers racing for this elite supercar? We'll find out. All right, this Labor Day weekend, we are taking a deeper look at the state of the American worker and the sustainability of job growth in today's economy. Labor Secretary Tom Perez joins me in his first national television interview since being sworn in. Mr. Secretary, good to have you on the program.
It's great to be here.
Congratulations Maria. To you, and thank you for spending time with us on your first national interview. So you were nominated by the president in March, just confirmed in late July. Right. Tell me about the priorities right off the bat. What's on your to-do list?
Jobs, jobs, and jobs. And my first 30 days or 45 days on the job here, I've been meeting people across the country, CEOs, labor leaders, people who are looking for work, community college presidents, to figure out how we continue to pick up the pace of job creation.
When I speak to business leaders, that uncertainty about the rollout of Obamacare, the uncertainty over healthcare reform, tax structure, everybody thinks we need new tax policy, that's what's hampering their decisions to hire. So you're a few weeks into the job. Have you reached out to business?
Absolutely. And I've had some remarkably productive meetings with CEOs across the country. For instance, recently I was in Nevada, and I met with the CEO of the largest public employer, the largest private employer in Nevada, MGM. And we talked a lot about the partnership between MGM and other large private employers in Nevada and labor unions to address the skills gap to ensure that they have the workforce necessary to succeed. We also talked a lot about healthcare because large businesses are large consumers of healthcare, and he's doing remarkable work to bend that healthcare curve to make it more affordable. And that's been my mantra throughout my career, is listening, learning, and finding common ground. And that's what we're doing now, and that's what we're going to continue to do.
So do you think we will see an ease up on some of the rulemaking for business so that they actually will put that money to work?
Well, I think we're going to see, again, common sense coalition. That's what I used to talk about in Maryland. Let's bring common sense to bear. I categorically reject this notion that you either have job safety or job creation. That's a false choice, and I've seen it in my work. And when I talk to CEOs, they tell me repeatedly about how the work that we have done in job safety is so critically important, because if there is no regulation, then it becomes a race to the bottom, and the employers who are playing by the rules get dragged down by the employers who aren't.
Why do you think businesses are increasingly shifting full-time positions to part-time positions?
Well, I'm not sure the data is showing that right now, Maria.
I mean, like UPS last week said they don't want to insure the spouses of people who are insured if the spouse can get health insurance somewhere else. You know, other companies are saying, look, I have to watch the clock on my employees because if they're full-time, I've got to pay them the benefits. I can't afford it. Let's make them part-time. So it's actually been, in some cases, a negative because it's too expensive, the health care.
Well, see, I think it's important to distinguish between anecdotes and then the broad data. I'm a data guy, and so you look at jobs that have been created. I hear this false premise that health reform is going to move everybody into part-time work. The data doesn't bear that out. Over 90% of jobs that have been created since the implementation of health reform have been full-time jobs. This focus on prevention that the Affordable Care Act has is going to bend that cost curve, because all too frequently, my brother's an ER doc. He's also the primary care physician for all too many people whose primary care physician is the emergency room. We've got to change that, and that's what health reform's doing.
Tell me about the minimum wage. Are we going to see the minimum wage go to $9 an hour in the president's second term? Is that a Capitol Hill battle you're ready to take on?
I hope the minimum wage will go up, because I firmly believe that nobody who works a 40-hour week should have to live in poverty. I spoke to the CEO recently of a large retailer. He said to me, I can have the lowest prices on that 70-inch flat screen, but if people can't afford to buy it, then I'm not going to be able to sell things. And I really believe that $7.35 an hour is not sustainable.
We've got another jobs employment report coming out this Friday. It will be closely watched as everyone's trying to figure out what it says about the Federal Reserve and whether the Federal Reserve is going to begin tapering back that bond buying program. What are you expecting? And I know you've been traveling all over the country. Where are the jobs?
Well, I didn't bring my crystal ball with me, so I don't know precisely what the jobs report will say.
Your characterization.
But here's what we do know. There's been 41 consecutive months of private sector job creation. 7.3 million jobs have been created. You look at the auto industry, 343,000 jobs have been created since June of 2009, when it was at its lowest point. The president's investment in the auto industry has certainly paid off. So we see that the economy is slowly and steadily gathering steam. But the president would be the first to admit that we need to pick up the pace of this recovery, and that's why his better bargain for the middle class, the investment in infrastructure, the investment in skills.
Now, your parents were immigrants to the United States.
They were.
Tell me about your priorities for immigration reform. How does that dictate how you approach your job?
Well, my mother grew up in Washington Heights, Dominican immigrants. My dad is also Dominican. If we want to talk about job creation, we want to talk about growing the economy, immigration reform is an indispensable part of that conversation. As you probably know, Maria, I'm sure, the Congressional Budget Office has talked about and documented the economic development impact of immigration reform. The Social Security Trust Fund is viable for 2 more years. GDP grows. We're, a half a mile from Ellis Island and the Statue of Liberty. Immigrants have been the engine of our economy for generations.
You spent much of your career in labor and civil rights law, and here you are, the labor secretary. But, you came from humble beginnings. What was your first job?
Well, my first job was actually picking up golf balls at a golf course. And then I worked at Sears for 5 years. And worked on the back of a trash truck. one summer. You do anything to make ends meet.
I love to hear people's first jobs. My first job, I was the coat check girl, and then I was a stock girl at a dress shop. Secretary, good to have you on the program.
It's been great to be here.
Thank you so much, Secretary Perez, joining us. Up next on The Money, a 1967 Ferrari recently sold for more than $27 million, the highest price ever for a vintage car at auction. What's driving up the cost for the Italian racing icon? Ferrari North America CEO Marco Mattiacci is with me to explain fast cars and the luxury consumer. Welcome back. Ferrari gearing up for another big year. Sales for their fleet of supercars rose 9% for the first half of 2013. And recently, the company clutched a big win with its hybrid race car, La Ferrari. The $1 million ride sold out before hitting showroom floors. Joining me now with a look inside this luxury brand, ultra luxury, is Ferrari North America CEO Marco Mattiacci. Marco, good to have you on the program.
Thank you for having Ferrari with you.
So much for joining us and for bringing these things of beauties behind us. Recently, a rare 1967 Ferrari set a world record as the most expensive road car ever sold at auction. It was $27.5 million.
Yes,
is that right?
indeed.
What does that say about the Ferrari brand versus other among the super luxury or luxury consumers?
Well, it's telling us three things. That Ferrari is as they said 3 months ago, it's the most powerful brand in the world. It's saying that people is investing in things that have a rarity, that have quality, have an heritage.
So the last time you and I spoke, 2 years ago, I believe it was, you said almost 30% of Ferrari sales came from the United States, making Ferrari's number one, it's the number one market, the U.S. is right now for Ferrari. So how are your sales today? Is it still that the U.S. is number one?
It's still by far the largest market for Ferrari, one of the most important. We have 35,000 customers. We sell almost 2,000 cars a year. But our focus is in quality, not in quantity. So we want to establish a great relationship with our customers to shorten the distance between us as manufacturer and our customer base, and making sure that the experience is the highest levels as possible.
You celebrated the 20th anniversary of the Ferrari Challenge Series. It's a program where Ferrari owners can compete against each other. Talk to us about that. They're competing at world-class racetracks, ending with the championship rally in Italy. How well do these programs do?
As I said, there are two different brands nowadays. Mass market brands are transactional brands, and brands like Ferrari that focus on the experience, on the relationship with customers. These are people, customers that want to experience the adrenaline of racing a Ferrari on the weekend, not to go to play golf, to talk with peers, to talk with people that have the same affinity, great entrepreneur. We offer them an incredible exclusive platform with Car 458, with great technology, Formula One coach, having fun in a different way, in a much more exclusive way.
The first hybrid supercar, the $1.3 million La Ferrari, it was unveiled earlier this year. Only 499 were being made, and they are completely sold out already. That's amazing.
It's a problem to have. In particular in the US, we're going to bring only 100 units, and we have almost 200 requests. But what I want to focus is the fact that is the ultimate integration between our Formula One department and the car, the street car that we produce. Plus, we are exploring new way and hybrid technology. So we have two engines, combustion engine at 100 horsepower, electric engine, 163 horsepower, but guarantee ultimate driving experience like only Ferrari can do.
Fantastic. So you brought some top models with you. We've got the FF, F12, Berlinetta, and California. Please show us. So this.
So here you see the hottest car at the moment, the F12.
This is the hottest car.
Yeah, 740
The hottest car of the moment. Look at this car. I feel like I'm in a luxury living room.
So this is 740 horsepower, dual clutch transmission, automatic transmission, or you can use the
so you can, I wondered that if it was only stick shift, but you can do automatic.
We don't produce any more stick shift in Ferrari. So I mean, this is the paddle shift coming from Formula One experience, or you can put automatic.
All you do is press the button.
Yes, the greatness of Ferrari nowadays is that you can still have the most amazing driving experience, but in an easier way, in a much more functional way.
It's so beautiful. I mean, the design is really one of the best things about Ferrari, right?
Yes, the design, and every car we sell, 2,000 cars in the United States, there is no one car that enters in North America that is the same of the other because there is a customization program tailor-made. You can see the stitching, the carbon fiber. So we have customers spending almost 10-15% of the value of the car just to make it its own Ferrari.
Tell me how fast this car goes.
Can go extremely fast. In US, you have to respect the law, but we can go above the 200 miles an hour.
200 miles an hour, wow.
740 horsepower, 0 to 60 in 3 seconds.
Marco, good to have you on the program.
Thank you very much.
Thank you so much for bringing these beautiful cars, and we appreciate you joining us.
Thanks a lot for Ferrari with you.
Up next, we'll take a look at the news this upcoming week that will have an impact on the money. As we take a break, take a look at how the stock market ended the week as Marco and I take a little spin here on Wall Street. Our show and our guests, check out the website, otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. First, though, take a look at the stories coming up in the week ahead that may move the markets and impact your money this upcoming week. On Monday, Americans will celebrate the Labor Day holiday, and all the U.S. markets will be closed for the holiday. On Wednesday, the Federal Reserve will release the Beige Book, which gives a snapshot of the economic conditions across the country. On Wednesday, the motor vehicle sales report is due. We will see if new car sales continue to surge in the month of August. And then on Thursday, G20 leaders will convene in St. Petersburg, Russia, for a 2-day G20 summit. That'll do it for us for today. Thanks so much for joining me. My guest next week, market maven Byron Wien of Blackstone. We'll get his ideas on investing. Each week, keep it right here where we are on the money. Have a great week, everybody. I'll see you again next weekend.